If you've been following the AI market at all, you've probably noticed it's sending some seriously mixed signals. I mean, one minute you're hearing about these record-breaking investments and historic growth, but then the next you see headlines about stocks just getting hammered and, this widespread fear. It's confusing, it's chaotic, and it feels like a total contradiction. So today, we're going to try and make some sense of all that chaos.
So let's just dive right into the central question, right? How can one single technology be the engine for both these massive fortunes and these spectacular failures, sometimes in the exact same week? Well, to get it, you really have to look at the market like a story in two acts.
Act 1 is what we can call the great AI build-out, and it all starts with money. I mean, a staggering amount of it is being poured into creating the fundamental roads and bridges and power plants of this new AI world.
Okay, look at this number. $185 billion. It's so big, it's almost hard to wrap your head around. So what on earth is this for? That is the high-end guess for what just one company, Alphabet, plans to spend on its capital expenditures. And that's basically all the physical stuff, right? The data centers, the servers, the hardware that makes AI actually work. And that's for the year 2026. This isn't just a big budget. This is a statement of intent on a global scale. And here's the real kicker. This proposed spending, it's more than double what it was just last year. So we're not watching some gradual increase here. This is an absolutely explosive acceleration. It's a gold rush for building the very foundation of the next technological era. So who wins in a phase like this? Well, it's companies like Ciena. They're in the business of AI infrastructure. You can think of it like the digital plumbing. And because of this massive build-out, they've just returned to the S&P 500 after 17 years and are now forecasting their fastest growth in over a decade. They are absolutely riding this infrastructure wave to perfection.
And just like CNBC puts it, the money is flowing into the foundation. And the companies that are laying those bricks are reaping some massive rewards. So Act 1 is all about building. It's optimistic, it's unbelievably expensive, and it's creating some very clear winners. But what about Act 2? This is where the story takes a really sharp turn. Act 2 is the great AI shakeup. Because while some are building the future, a lot of others are absolutely terrified that their present is about to be demolished by it. The optimism of the build-out is being matched by the fear of disruption. And you can literally see that fear in the market's reaction. Just the announcement of new AI tools can send shockwaves through the established software sector, causing these big sell-offs. Even a key player like the chip designer ARM Holdings saw its shares plunge after its revenue outlook made investors nervous. The mood here is the complete opposite of what we just saw. You see, investors are now looking at these traditional software companies and they're asking a terrifying question. Is your product even going to be relevant in a few years? That uncertainty, that's what's hammering these stocks. It's a total crisis of confidence. And this pessimism is so intense, it's actually pushed China's Hong Kong-listed tech stocks into a full-on bear market. This isn't just, a bad day of trading. It's a sustained, self-reinforcing cycle of negative sentiment that's being driven by these exact fears about AI.
And here is the paradox in a single headline. ARM Holdings posted record revenues, totally fueled by AI demand, yet their stock plunged 8%. Why? Because their forecast for future growth didn't meet these sky-high expectations. It just shows how incredibly nervous the market is. Even if you're part of the AI boom, you are not safe from the AI shakeup.
Okay, so we've got a boom and a bust happening at the exact same time. How do we connect these two stories that seem like total opposites? Well, the answer is they're not opposites at all. They are cause and effect. Let's use a metaphor. Think of the AI build-out as building the infrastructure for a brand new city. You're laying down superhighways, a next-generation power grid. That's Act 1. Act 2 is what happens when people realize this new city is going to make the old one obsolete. I mean, who needs the old, slow roads when there's a brand new highway? To put it as simply as possible, the great AI build-out isn't just happening alongside the shakeup, it is causing it. The massive investment in these new AI platforms is precisely what is devaluing the old ways of doing things. One fuels the other.
And this comparison just makes it crystal clear why the disruption is so severe. The old world of software, it was often expensive, it was slow. The new world, powered by all this new AI infrastructure, promises tools that are cheaper, faster, and way more autonomous. This isn't just an upgrade, it's a fundamental change in the entire economics of technology. And this just captures the entire story in one sentence. It's the best of times for those building the new foundation, and it's the worst of times for those who built their empires on the old one. The excitement and the terror are just two sides of the very same coin.
So, where does all this leave us? What happens after the build-out and the shakeup? Well, we're left with a completely new landscape, a new map for the entire tech industry. This is really the key takeaway. What we're seeing isn't a market crash in the traditional sense of the word. It's a violent reorganization. Value is shifting. It's not just disappearing. It's moving away from the old platforms to the new one that's being built right now with those hundreds of billions of dollars. Which leaves us with one final thought. The foundation is being laid. The old structures are being shaken to their core. So the great question that's going to define the next decade is this: who is going to build the new empires on top of it?